If there's one trading sin I've never committed in my entire 11-year career, it's scalping. That's where I draw the line. Now, if you know me well, you know my roots are in futures trading. That's where I started, and over the years, I developed my own trading strategy. The same one that made me consistently profitable to date. That's the strategy I teach my students at Online Trading Campus. And it's all about swing trading. But here's what most people don't know. I also teach day trading. And lately, my students are hyping up this strategy. Now look, I'll always preach that swing trading tends to be more profitable in the long run. At least for me. I like swing trading because it suits my lifestyle and my needs. But I get it. For a lot of traders, especially the newer ones, day trading offers that quick cycle, that fast-paced action they're looking for. But here's the catch. If you want to day trade and actually make money consistently, and I'm not talking about randomly jumping in with massive lot sizes trying to scalp the market, you've got to follow a rock-solid system, a real strategy. And today, I'm going to show you exactly that. By the end of this video, I'll prove to you that it's absolutely possible to become consistently profitable with this day trading approach. If, and this is a big if you stick to my rules. We are not playing games here. There's a price to pay for consistency, and that price, discipline. But I've got you covered. In this strategy breakdown, I'll walk you through every rule, step by step. And I'll even show you how our mentor Clemens pulled in $2,000 in just 5 minutes trading what we call the window of opportunity on the 15-minute chart. I actually made a video on this strategy a while back. Super detailed, super technical. But if you missed it, no worries. Today, we are diving in again, and this time, we are doing the analysis on TradingView, which makes it way more fun. Hi guys, sorry for the quick interruption before we get back to the video. I promise it will be worth your while, so listen closely. I've observed that most traders who are watching are still struggling, either with strategy or with capital, and the odds are not changing. While my edge has been consistently making me money and has even got me banned from the most well-known prop firm that I cannot mention directly for being too profitable. I will be hosting my first ever live event on May 6, 2025, which I want to invite you, my YouTube subscribers to. But you need to know that it's capped at 500 participants. This event is tailored for everyone who is not a member of my Online Trading Campus. If you're already a member of the campus, I would kindly ask you to leave your spot open for someone who isn't. During this free event, I will be disclosing my edge and my strategy and also share with you what I'm not able to share on YouTube. In the midst of a changing world order and once-in-a-lifetime opportunities, I want my knowledge to be accessible to the world and to make a global impact. And I can only do that by leveling the playing field. Thousands, if not tens of thousands of people have commented this. So, the 6th of May. My first ever and free live event is going to change lives. Besides strategy, access to capital is the second biggest problem. I'm going to reveal what you need to understand about prop firms. I must say that due to software restrictions, we do really have limited capacity for attendance of my live event on May 6th. And therefore, it's first come, first serve. There won't be any recordings available, or I won't be able to disclose here what I'm going to be disclosing in this live event. There is a registration link to attend my live event on May 6th in the description and also pinned at the comments section. Pause this video, click there now and continue watching afterwards. Apologies for the interruption of this video, but this is happening once in a lifetime. Let's get back to the video. Strategy breakdown. All right, first things first. Let's talk about the concept of the window of opportunity. Why do we need to look at very specific times of the day? Well, timing is everything. You can study chart patterns and candlestick formations all day on the lower time frame. But if you don't know when to look, you're basically playing darts blindfolded. So let's fire up TradingView and pull up the 15-minute chart on the Dow futures. We are also going to look at Nasdaq, S&P 500 and Russell in a bit. Before we start anything, you need to understand this. These assets trade in two separate sessions. Regular trading hours, that's the daytime session. Electronic trading hours, also called the Globex session or the extended trading hours. Now, back in the day, regular trading hours were during the morning when traders were literally shouting across trading pits. Those classic Wall Street scenes. That session still brings the most liquidity and volatility. So regular trading hours run from 9:30 a.m. to 5:15 p.m. Eastern Standard Time. And electronic trading hours kick off at 6 p.m. and run overnight until 9:30 a.m. the next morning. And right now, we are focusing on electronic trading hours. So we select the electronic trading hours chart. Again, we are on the Dow futures, 15-minute time frame. This chart is our starting point. So we need to add this in our rulebook. Step 1. Dow futures, select the electronic trading hours chart. Now, we need to make the trading hours clear for us. So looking at the previous day, we pinpoint our open at 6 p.m. with a vertical line and close at 9:30 a.m. Make sure you select the exchange time zone, or you can convert these times from Eastern Standard Time to your local time zone. So that's step 2. Locate the electronic session open and close. Now, we start looking at the highs and lows of the day. We look for the highest point and the lowest point. When we are confident that we found them, we highlight the high with the horizontal line and the low with another horizontal. That's step 3. Let's make sure we write that down. All of our analysis on the electronic session is now concluded. We will now switch to the regular session. So that's step 4. Alright, what do we need to do on the regular session? That's step 5. We look for supply zones above the Globex high. It's possible that there won't be any. If there aren't any high quality zones, then we won't take that trade. Step 6. Identify demand zones below the Globex low. Again, we want to focus only on high quality zones. If you haven't seen the freshness and originality video, you need to check it out. Just to make sure we are all on the same page when I say high quality zone. Step 7. We get ready to take trades based on the supply and demand zones that we just found. And I will tell you exactly how to find trades that meet our extended set of rules right now. But first, I need to explain what we just did. Why are we looking for supply and demand zones away from the Globex high and low of the day? And where can we find the window of opportunity? Well, there's a very interesting thing happening behind the curtains here that you should know about. Because what we are doing right now is setting up a bait for novice traders to trap them in our trades. The breakout bait. During the Globex session or the electronic trading hours, highs and lows are formed. As the day session begins, many traders who still follow the herd mentality are familiar with the Globex highs and lows, and they have their eyes on these levels. Now regular trading hours are open. When price rises above the Globex high, many traders become bullish and either buy the breakout or prepare to do so. This is a classic novice mistake that we can trade against. Now, when this happens, when traders buy above the Globex high into a supply level, that's what we want to see. We want to see them thinking, breakout, let's go long. So we set our bull trap. Our plan is to trap them inside this zone, then dump the price back by selling at supply like we always do. A key thing to notice here, we don't want to just short randomly. We want to short in a supply zone. So price breaks above the Globex high into a supply zone, then we short from this supply zone. And another key point here is that we set all this up ahead of time. We don't enter at market price. No, We place a pending order which will be executed automatically if bulls buy in our supply. And it works both ways. When price breaks below the Globex low, so we are looking at the lows now, from the low of that extended trading hours. Once the regular trading session begins at 9:30 Standard Eastern Time, once price breaks below the Globex low, these traders become bearish and they start planning to take breakouts. In other words, they are shorting. That's our bear trap. We set our buy order. They think they're riding the trend. Instead, they're handing us profits on a silver platter. You'll see this exact scenario play out over and over again if you know where to look. And that's the idea behind this day trading strategy. The search for volatility. I know I haven't still answered the question. What is the window of opportunity? Well, it's one of the best refinement tools that will help you find higher quality zones easier. Let me show you how. As we mentioned in step 5 and 6, we identify any supply zones that are above the Globex high and demand below the low. Now, if we limit our search to the zones located between 8 a.m. to 11 a.m. Standard Eastern Time during the regular trading session, we are looking at the window of opportunity. Those are some of the highest quality zones that you could find on the lower time frames. And I will tell you why. The time between 8 a.m. and 11 a.m., the stocks and indices experience the most volatility. More volatility during those hours equals large institutional candles, equals better departure from our zones, leading to higher quality zones. So if your lower time frame zone is located inside the window of opportunity, get ready to place those trades. And if we can't find any high quality zones during this time, we just pass on the trade. This is a very important filter to weed out any low quality trades. So let me add it here as step 8. And our step 9 would be to repeat all the previous steps on all the other indices, Nasdaq, S&P 500 and Russell. More rules equals less risk. Now, one of you might be thinking, if this day trading strategy is consistently profitable as I claim, why don't trade it anymore? Well, one of the biggest drawbacks of this strategy is that you have to show up every day. It takes only 1 hour to set up, but for me personally, I can't afford 5 to 6 hours a week, especially because you shouldn't expect high gains from this strategy. If you could make 1 hour per week, you're an overachiever. Back in the day, I used to aim for only 1 to 2 hours per month. So on a 100K account, you should be making between $1,000 to $2,000 every month. Remember, if it was easy, every rookie who traded the market would be consistent with it. It is not easy. It's challenging. It needs a lot of discipline and a very strong mentality. But at the end of the day, the question remains, can you make money every single month? Yes, you definitely can. We actually asked a group of 60 students about their winnings from trading the Globex traps with us in this recent poll. And as you can see, more than half of them did not make or lose any money, thanks to our aggressive risk management rules that we recommend. Only 7% lost 1 hour during this week. 19% made a profit of 1 hour and 12% made 2 hours. What's really interesting is seeing that 5% made more than 3 hours. That's off the charts good. But before you get all excited chasing 2 and 3 hour trades, let's make sure you don't fall into the greed trap. I've got 7 rules for you that will keep you grounded, lock you into the system, and most importantly, protect your capital by keeping your losses to an absolute minimum. Trust me, this is the part most traders skip, and it's exactly why they blow up. First of all, you need to look at the economic calendar. When trading the lower time frames, you should always be aware of all news events. So let's add that as rule number 1. Always look at the economic calendar. Why? Because we avoid news. We don't engage during news events as they cause a lot of unpredictable volatility. Rule number 2. we look at the stock's performance in the past weeks. For example, we look at the MAX 7 specifically if we are engaging the Nasdaq. The MAX 7 are a group of high-performing stocks. They are Apple, Google, Amazon, Meta, Microsoft, Nvidia, and Tesla. Keep an eye on these stocks. Rule number 3. We look at seasonality and fundamental analysis. Unlike swing trading, which rely heavily on fundamentals, here it plays a smaller role. We skim through our OTC indicators just to make sure we are not opposing the institutions in any upcoming major moves. Rule number 4. Trend analysis on the higher time frames. Are we located high or low on the chart? Are we in an uptrend or equilibrium? I'm sure you know all about this by now. We have been studying this for the past year. Rule number 5. Price action and filtering out low quality zones on the lower time frame. We select only fresh zones to place our bull or bear traps. We use 60 minutes, 30 minutes, 15 minutes, and on some rare occasions, the 5-minute chart. Rule number 6. Conduct our analysis on all 4 indices to select the better risk to reward ratio and probability of getting filled. All of these steps have to be repeated 4 times, once on each index. And you might end up trading only 1 or 2 of them, depending on the zones and the market conditions. And finally, rule number 7. You always have to take the next trade. Why? Because if you don't, for any reasons, like getting cold feet, or because you moved your stop loss to break even, whatever the reason, it should not affect the next trade. Each trade is an isolated event. So the biggest downside of trading lower time frame, you must have an incredibly strong mentality, automated decisions, quick execution, and always keep your emotions in check. Because we have very limited time to execute. And if you start skipping trades, you will eventually mess with your win-loss and your risk-to-reward ratios, and by the end of the month, you'll be in the red. The only reason to start skipping trades if you're already on the hot streak and made 2 or 3 Rs in 1 week. In that case, I would say stop trading, go out, enjoy your life. You already achieved above expectations. Because let me say that again, you should only expect to make 1 to 2 hours per month using this system. One of you might be thinking right now, I'm trading a 5K account and 2 hours for me are only $100. This trading system is not worth the effort. Well, this is a capital problem, not a system problem. You need to scale up your funded account. You don't need to change the system and you don't need to place more trades. You need to keep making $100 per month and save to get a bigger funded account. That's the only way to scale. Mentor saving the day. So again, I need to emphasize this. If you plan on trading the Globex traps, do it using the rules that I just discussed. Don't create your own recipe out of this. And most importantly, don't be like this guy who had this brilliant idea to apply the Globex traps on Bitcoin, of all assets. But luckily, he asked Clemens, our Globex expert, and I want to share his response with you.
Bibli is asking, did anyone did the Globex trap strategy for Bitcoin? I haven't. I don't know. Bitcoin trades 24/7. You also have to be a little bit careful with Bitcoin futures, because with Bitcoin, you have that weird thing where the futures are actually not the underlying, right? We always say the futures are the reality, and then the cash charts and the CFDs, they're derivatives. With Bitcoin, it's actually the other way around, because if you read the description of the Bitcoin futures, it actually takes, I think, 3 or 5 price quotes from major exchanges, so from Coinbase and I think from Binance and I don't know what, into consideration, runs them through an algorithm, and then comes up with the futures price. So in this particular case, your futures is actually a derivative of decentralized spot charts, if that makes sense. So the notion of a regular and an extended trading hour doesn't really apply there. So I don't really know if it works on Bitcoin. And honestly, at least For me, with my mental capacity, I don't know if I want to trade Bitcoin on a 3-minute chart. Just like I already lost all my hair. So no. Yeah.
That was quite a save. This is one of the moments where having a trading mentor looking over your shoulder every day makes all the difference. We are talking about the difference between consistently pulling 2 Rs each month and blowing up your entire account over one silly mistake. It's those small real-time corrections that separate success from disaster. Alright, so get this. Clemens had an absolute monster of a week. He locked in $2,000 on a single trade, and it lasted only 5 minutes. Talk about sniper precision right into the window of opportunity. This is the kind of timing that separates the pros from the pack. And guess what? He's about to join us right now in the practical application session. He's going to break down exactly how he pulled it off, step by step, right on the charts. We are going to revisit everything we talked about, but this time you'll see it in action. Let's watch how this incredible trade came together.
All right, before I run you through that trade from April 1st, let me first take a moment and go over one more time how I identify Globex traps and set them up, just the way I do it almost everyday life for our OTC students. So I'm right here on TradingView and I'm looking at the S&P 500. As Bern explained, Globex traps work on all the indices, so be it the Nasdaq, the Dow, the Russell, or like in our case right now, the S&P 500. The first thing I want to do is I want to mark out the overnight session, so on my Globex high and my Globex low. The easiest way to do this is on a daily chart before the market opens, as close as to the market open as possible, and by simply adding 2 horizontal lines, which I'm going to do right now. So I'm going to add the first line and I'm going to make this the Globex low. So I'm just going to call it here Globex low, and we want to have that in green, and I will position that at the bottom of today's range. Then I will add another line and I will make this red because this will be the zone where we start shorting, and I will call that the Globex high, which marks the highest point of our overnight range. So there we have it. I simply added it to the top and the bottom part of our daily candle. Up here is the overnight session high, so the highest point the price reached in today's overnight session, and down here is the Globex low, so the lowest point the price reached so far. Next, I want to go down in time frame to, let's say, a 60-minute, and we'll take it from there. So I've gone on to a 60-minute chart, and important, I want to filter out the overnight session because I'm only interested in the regular trading hour levels, so the ones that have the highest volume. In TradingView, that's quite easy. You just select down here, regular trading hours. Then I look for high quality supply and demand zones that are as close as possible to the overnight session high and the overnight session low. So right here, I have a beautiful rally base drop on the 60-minute. So this could be our supply right here. And if I look down, I have a rally base rally, which could be our Globex trap demand zone. And I'm going to mark this off down here. And let me just make this green because this would be an area where we would be looking to buy. Now, one more crucial step, I need to verify if it's an older level that price at no point pierced this level in any of the previous overnight sessions. So the easiest way to do this, if you just toggle again here, you look at the electronic trading hours and you just verify that price actually never went through it. I have very conservative rules when it comes to Globex traps. So for me, the zones also have to be fresh, not only in the preferred, but also in the wider version. And if I look at these, both zones check all the boxes. They're very close to our Globex high and low. They're of high quality. They are on higher time frame in our case, on 60 minutes. And they have a beautiful, strong leg out. And of course, they're fresh. If you want, you can refine it. So you could go down, for example, on the 15-minute chart. You switch back to the regular trading hours to filter out all that overnight noise. And you see if there's a zone that's even closer, or if you can make that 60-minute zone a little bit smaller. So in our case, for example, we could argue we have here a rally base drop, followed by another drop base drop. So we can make that either a level on top of level, or we can just shift our entry a little bit here to that 15-minute preferred zone, which would enable us to squeeze out even more reward if price reaches our zone. However, for our demand zone, there isn't really much I can refine, so I would just leave it as it is. Now comes the important part. I need to wait. I need to wait until the regular trading hour commences, i.e. the market opens. Slightly before the market opens, I want to re-verify that my Globex high and my Globex low remain unchanged. If, for whatever reason, price is pushed a little bit higher, for example, before the regular trading hour commences, I would have to adjust my Globex high line. If that line would touch my level, then unfortunately this trap is no longer valid and I would have to remove it and look for another one that's further above. It's also important that you don't panic or that you don't do any rush decision. Again, we set a trap and we are patiently waiting. We let price come to us. We don't chase price. All right. Now that we've covered my process and the theory behind Globex traps, let's go back one more time into the charts and have a look at the trade that I took on April 1st together with our students at OTC. Alright, we're back in the charts and this time we're looking at the Russell. Down here we had our Globex low and up here our Globex high. Now this zone down here, this drop-based rally, is what caught our interest. It was a beautiful 5-minute Globex trap. It ticked all the boxes in terms of location and formation. So let's look at the replay and see candle by candle just what happened. Okay, I'm gonna go down to 1-minute chart so we can really focus step by step and see how this trade played out. The market opened quite weak and we immediately got a very strong sell-off in the first 2 minutes of the market. Now, it's important to note that at no time did this cause us to panic. Like I said earlier, we simply wait patiently in our trap and let price come to us. The market consolidated a little bit in front of our level before ultimately collapsing right into our zones, roughly 5 minutes after the market opened. And right here is where we got tagged in. So now we're in the trade. And there's only two possible outcomes here. We either hit our target and make money, or we get stopped out and we simply move on to the next trade. So what happened next? Price spent roughly 1 minute in our zone before strongly already reacting out of it, causing us to move our stop loss to break even after we hit a 1-to-1. So at this point of time, we were already looking at a free trade. We either now make money or we get stopped out at 0. Pretty cool. So what happened next? Within another minute, price shot into our target and that ended the trade. So you see that within roughly 4 minutes, we entered the trade and we got out and hit our target. So that for me on my $1 million Campus Fund account was $2,000 in profit. In, like I said, under 5 minutes. That's pretty cool to me. Now, if you want to see more setups just like this or more of my face just like that, all you have to do is join Online Trading Campus. I'm live every Monday, Tuesday, Wednesday and Thursday with our community trading Globex traps live in front of you. I hope to see you in one of my classes in the future.
That's it for this value-packed lesson. See you in the next one.